Gentlemen, the most dangerous man on Wall Street isn't the one across the ticker from you. It's the one staring back in the mirror. Every loss I've ever taken, I've ever made, began with that man. The market didn't beat me. I beat myself. Not through ignorance, but through emotion. Through fear when I should have been calm, and through greed when I should have been content. You can read every chart, learn every pattern, memorize every rule. But if you can't control yourself, the market will teach you that lesson the hard way. Because in speculation, the battle isn't on the exchange floor, it's in your own mind. Ladies and gentlemen, I've spent my life studying one thing: the behavior of the market. I didn't study theories, or predictions, or the opinions of clever men sitting behind desks. I studied the market itself, because if there's one signal I've learned never to ignore, it's the market's own action. You see, the market talks every day. It speaks in the language of price and volume. It tells you everything you need to know, if you have the patience and discipline to listen. But most traders never hear it. They're too busy listening to themselves, to the newspapers, to their brokers, or to the gossip around the ticker room. They want to believe what should happen instead of seeing what is happening. That's why I always said, and I'll say it again, the market is never wrong. Opinions often are. The market doesn't care about your hopes, your charts, or your theories. It doesn't even care about your money. It does what it wants to do, and it tells you what it's doing through its own movement. If you can't learn to listen to that movement, you have no business speculating. When I was a young man, I learned to read the tape, not to predict, but to observe. I noticed that before a big advance, a stock begins to behave differently. The action changes. The price stops falling on bad news. It starts to rise quietly on good news, or even no news at all. And then one day, with volume behind it, it breaks out. That's not a coincidence. That's not luck. That's the market signaling a change. The insiders, the professionals, the people who know, they're acting. You can see it on the tape if you're watching. And when the market gives you that signal, you don't argue with it. You don't ask why. You act. Because by the time the reason appears in the headlines, the opportunity is already gone. The same is true on the downside. When a stock refuses to rally after what looks like good news, when it sags quietly no matter what's said about it, that's not a mystery. That's the market warning you. And if you ignore it because you think you know better, well, you'll learn soon enough that the market has the final word. I've seen men lose fortunes not because they didn't have information, but because they ignored the one source of truth they had, the market's own behavior. They bought because a friend told them to, because a paper said it was cheap, or because they couldn't stand to miss out. They didn't look at what the market was doing, and the market punished them as it always does. Every trade I ever made, every successful campaign, began with a simple observation: how is the market acting? Not how I wish it would act, not how someone else says it should act, but how it actually behaves. That's the only real information there is. You can have 1,000 opinions, but the price doesn't care. If the market is moving against you, it's telling you that you're wrong, at least for now. The worst mistake a trader can make is to argue with the tape. The tape doesn't argue back. It just takes your money. When I see a stock acting strong, I don't call it too high. When I see it acting weak, I don't call it too low. Those words, too high, too low, are dangerous. A stock is never too high to buy if it's acting right, and never too low to sell if it's acting wrong. The only question that matters is, what is the market saying through its action? The market doesn't lie. People do. The market doesn't flatter or deceive. It simply tells the truth in numbers, in movement, in rhythm. It's our job to learn that rhythm, to feel it, and to respect it. I've had my share of wins and losses, and I've made every mistake a man can make in speculation. But every time I ignored the market's action, I paid for it. Every time I respected it, I prospered. That's not coincidence. That's experience talking. So if you remember nothing else from what I've said today, remember this: the market's own action is the only signal that matters. Forget the chatter, the forecasts, the noise. Watch the price. Watch the volume. Watch how the market behaves. It's the truest, clearest voice you'll ever hear in speculation. Because long after the experts are proven wrong, long after the news is forgotten, the market will still be there, quietly speaking the truth to anyone patient enough to listen. I've seen countless traders come and go. I've watched bright young men walk into Wall Street with more confidence than capital, and I've watched them leave with neither. Why? Because they thought the market cared about their opinions. They wanted to predict what was going to happen. But let me tell you something. Prediction is a fool's game. Confirmation is what makes money. The market doesn't pay you for being early. It pays you for being right. And being right doesn't mean guessing the future. It means waiting for the market to prove your idea correct. You can think what you like about a stock, about an industry, about the whole market. You can have your theories, your reasons, your research. But none of that matters until the market confirms it through its own action. Until price and volume say, yes, you're right, you have nothing but a hope. And hope, my friends, is a dangerous companion in speculation. I've seen men lose their entire fortunes because they couldn't wait. They wanted to be the first in, the smartest man in the room. They'd buy before the move started, and when the market didn't confirm, they'd hold on, waiting for it to prove them right. But the market doesn't reward ego, it punishes it. When I take a position, I don't do it because I think the market should rise or fall. I do it because it is rising or falling. That's confirmation. I let the market show its hand first. I wait for the price to break through resistance on volume. I wait for a pattern to complete, for strength to reveal itself. When the market confirms, then, and only then, do I move. I learned long ago that it's far better to be late and right than early and wrong. The man who insists on guessing the top or bottom is a gambler. The man who waits for confirmation is a trader. The gambler bets on what he hopes the market will do. The trader acts on what the market is doing right now. Let me give you an example. In my campaigns, I never bought a stock simply because it looked cheap, or because the papers said it was undervalued. I waited until the stock acted strong. That meant it was being accumulated. Smart money was moving in. The confirmation was right there in the price action. That's where I joined the movement, not before. And when I saw weakness, when a stock refused to rally, when the volume dried up, when the tone changed, I didn't wait for explanations. I didn't need to know why. The confirmation was already there, the strength had vanished. I got out. That discipline saved me more times than I can count. Most traders lose not because they don't have ideas, but because they can't wait for confirmation. They want action. They crave movement. They confuse activity with opportunity. But the market doesn't move just to entertain you. It moves when the conditions are right, and your job is to recognize when that's happening. Every great move has a tell, a confirmation. It's not hidden. It's right there in front of you if you know what to watch for. The trouble is, most people are too impatient to wait for it. They jump in, they hope, and they pray. But hope isn't a strategy. Patience is. I never cared about being the first man in or the last man out. I only cared about being right. When the market confirmed my judgment, I pressed my advantage. When it didn't, I stayed out or got out. The tape was my teacher, my judge, and my confirmation. People used to ask me, Mr. Livermore, what's your secret? And I'd tell them there's no secret at all. Just this: don't anticipate, confirm. Don't tell the market what to do. Let it tell you what to do. The great mistake is thinking you can outsmart it. You can't. The market's too big, too powerful, too wise for that. It's been humbling men for centuries. But if you learn to listen, if you wait for the market to confirm your opinion before you act, you'll survive, and more than that, you'll prosper. So, when you're about to make a trade, ask yourself one question: has the market confirmed my idea, or am I just hoping it will? If it hasn't confirmed, stand aside. Wait, there's no hurry. The market isn't going anywhere. Opportunities will always come to the man who can wait for proof. Remember what I've learned through years of success and ruin alike: prediction is pride, confirmation is discipline. And in this business, discipline is what keeps you in the game long enough to win it. If you really want to understand the market, you must first understand people. Because the market is people. Their hopes, their fears, their greed, their hesitation. Every price change, every spike in volume, every rally and every crash. It's all the result of human emotion translated into numbers on the tape. When you watch prices move, you're not just looking at data. You're watching a crowd think. You're watching human nature at work. And human nature, I assure you, never changes. I used to say, and I still believe it, that the game of speculation is the same today as it was 100 years ago, because human nature never changes. The machinery might look different, the tools might improve, but the emotions remain exactly the same. The same fears that drove traders to sell in panic in 1907 drive them to sell today. The same greed that made men chase prices in 1929 makes them chase markets now. And how do you see all that? Through price and volume. Those two things, price and volume, are the X-ray of market psychology. They show you what the crowd is doing and how strongly it feels about it. When you see price rising with volume expanding, that's not random. That's the crowd committing itself. The public is buying, the professionals are buying. The market's telling you the crowd's emotion is turning to optimism, maybe to greed. But when prices rise on light volume, or begin to falter even as good news comes out, that's not strength, that's distribution. The smart money is slipping out the back door while the public comes rushing in through the front. You can read it if you're watching closely enough. I never cared much for explanations after the fact. The newspapers always have a reason for why a stock went up or down, but by the time you read it, it's already old news. The market knew long before the headlines did. Because the market is made of people acting on what they feel, not what they say. When fear takes hold, it's written all over the tape. Prices collapse faster than you think possible and volume explodes. That's panic, pure and simple. No analysis, no logic, just emotion. And when that fear burns itself out, when the last weak holders have sold, you'll see it in the price and volume again. A quieting of the storm, a shift in tone, the beginning of accumulation. That's when courage is rewarded, because you're acting against the crowd's emotion, not your own. Speculation, you see, isn't about fighting the crowd, it's about understanding it. You must learn to read its moods, its reactions, its rhythm. You must learn to recognize when the crowd is right and when it's gone mad. Price tells you what the crowd is doing. Volume tells you how intense their emotion is. Together, they tell you the truth that most traders never see because they're blinded by their own emotions. Most men buy because others are buying, and sell because others are selling. They think they're being smart when they're really just following the herd, but the successful speculator stands a little apart. He watches the herd. He studies its movements. He knows when enthusiasm is peaking and when fear has gone too far. And he acts only when the market confirms that the crowd's psychology has shifted. Every great bull market begins in despair and ends in euphoria. Every bear market starts in confidence and ends in panic. The tape records this emotional cycle in plain sight. You don't need to guess when it's changing. You can see it. The secret is having the nerve to believe what you see instead of what you hope. I've made millions by doing exactly that. By reading the tape, by studying how price and volume reflected the crowd's mind. Not because I was smarter than the crowd, but because I was more disciplined. I didn't let my own emotions drown out what the market was already telling me. So, remember this: the stock market is just a mirror that reflects the psychology of men and women dealing with money. If you learn to read that reflection through price and volume, you'll see what others can't. You'll see when greed is taking over and when fear is ending. You'll see the truth behind the noise. Because in the end, the market isn't a mystery. It's human nature measured and recorded in numbers. And if you can understand people, if you can read their fear and their greed in the tape, then you can understand the market and make it work for you. If there's one rule I lived by through every bull market and every crash, it's this: the market is never wrong. Opinions often are. That rule has cost me fortunes to learn, and it's made me fortunes too. Every time I forgot it, I paid dearly. Every time I remembered it, I prospered. The tape, that endless stream of prices, is the only thing in this business that doesn't lie. It doesn't flatter, doesn't deceive, and it doesn't care what you think. The tape simply tells the truth. You may not like what it says, but if you respect it, you'll survive. Ignore it, and you'll be destroyed. Most men come to Wall Street with opinions. They bring their logic, their charts. They think they can outsmart the market, as though the market were a person they could debate. But the market doesn't argue. It acts. It moves. It tells you where it stands every minute of the day. And when you try to argue with it, you're not proving your intelligence. You're proving your arrogance. When I was young, I made that mistake many times. I'd buy a stock because I believed it had to go up. I'd sell because I felt it had topped. But the tape would tell me otherwise. Prices would move against me, slowly at first, then suddenly. And instead of listening, I'd tell myself the market's wrong. But the market was never wrong, I was. I learned, often the hard way, that the tape doesn't care about your reasons. You can have the finest logic in the world, and the market will still wipe you out if you're on the wrong side of it. The only thing that matters is what the tape says, not what you think it should say. You must understand something. The market is always right because it represents the collective action of everyone in it. It's the sum of all hopes, fears, and knowledge. It's the judge, the jury, and the executioner. You can fight it for a day, a week, even a month. But sooner or later, the market always wins. That's why I stopped trying to outthink it. I stopped asking why and started asking what. What is the market doing right now? What is the tape telling me? Because the market's going up. That means there are more buyers than sellers. It means money is flowing in. You can argue all you want about overvaluation or logic, but the tape doesn't care. It's telling you what is, not what ought to be. The wise trader listens. The foolish trader argues. And when the market turns against you, and it always will, sooner or later, don't fight it. Don't cling to your opinion. Don't tell yourself the market's making a mistake. It's not. The mistake is yours. Get out. Step aside. The tape has spoken and you must respect it. Respecting the tape means obeying it, even when it hurts your pride. Especially then. The moment you start to think you're smarter than the market, you've already lost. The tape doesn't care about your pride. It only cares about truth. the truth of supply and demand. Many traders fail not because they lack intelligence, but because they lack humility. They don't know how to admit when the tape proves them wrong. They hold on hoping, praying, arguing. But the tape has no mercy for pride. It punishes it without hesitation. In speculation, survival depends on obedience to the tape. The tape says what the market is doing, not what you wish it would do. And in that truth lies your safety. The market doesn't owe you an explanation. It doesn't have to justify its movements. Your job isn't to question it. Your job, remember this rule, and remember it well: the market is never wrong. Only you can be. When you understand that, you stop fighting, you stop arguing, and you start listening. You trade what is, not what if. The day you learn to respect the tape is the day you stop losing foolishly and start trading intelligently. Because the tape, my friends, is the voice of the market. And the market always has the final word. If I could give you just one lesson from a lifetime in speculation, it would be this: discipline and emotional control are worth more than any system, any chart, or any secret tip. The stock market is a game of human nature, and your greatest enemy in that game is not the crowd. It's yourself. I've seen brilliant men lose everything because they couldn't control their own emotions. They knew the rules, they knew the tape, they knew the patterns. But when fear or greed took hold, all that knowledge vanished. Their judgment went out the window. They stopped trading the market and started trading their feelings. You can have the best plan in the world, but if you can't keep your emotions in check, that plan will crumble at the first sign of pressure. The market will test you. It always does. It will tempt you to buy too soon, to hold too long, to add when you should cut. And if you don't have discipline, it will break you. There's no greater test of character than watching the market move against you. Every tick lower whispers, hold on. It'll come back. Every dollar lost makes your pride scream. You can't sell now. But the tape doesn't care about your pride. It's giving you information, not sympathy. And the disciplined trader listens to information, not emotion. I learned long ago that the difference between success and failure in speculation isn't intelligence. It's control. Control of self, control of impulse, control of fear. You can't control the market, but you can control how you respond to it. That's where victory lies. People always talk about my big wins 1907, 1929, but they forget the years I spent rebuilding after I lost it all. Every one of those losses came from the same mistake: breaking discipline. I ignored my own rules. I let emotions guide me instead of logic, and the market punished me every time. Discipline isn't just about cutting losses, though that's part of it. It's about knowing when not to trade. It's about waiting for the right setup, the right confirmation, the right moment when the market aligns with your plan. Most traders lose money not because they take the wrong trade, but because they take too many trades. They can't stand still. They confuse motion with progress. But in this business, patience is power. The hardest thing in the world for a speculator is to do nothing, to wait. But waiting is what separates the professionals from the amateurs. You wait for the market to show its hand, for the tape to confirm your idea. You wait because you respect the process more than your own impulse. That's discipline. And when you finally act, you act decisively, not halfway, not timidly. Discipline doesn't mean hesitation, it means control. When the conditions are right, you strike. When they're wrong, you step aside. Fear and greed, those are the two devils that destroy most traders. Fear keeps them from buying when they should, and greed keeps them from selling when they must. You can't eliminate those emotions, they're part of being human. But you can master them. You can recognize them, name them, and refuse to let them dictate your decisions. I always said, it was never my thinking that made the big money for me. It was always my sitting tight. Sitting tight. That's discipline. It means trusting your plan once the market has confirmed it, and staying with it until the market tells you otherwise. It means resisting the noise, the rumors, the temptation to act for the sake of acting. Most traders can't sit still long enough to make a fortune. They want excitement. But the real money is made in the waiting. You see, speculation isn't about being brilliant. It's about being steady. The market rewards the man who can keep his head while everyone else is losing theirs. So remember this, my friends, your emotions are the market's best weapon against you. Control them, and you control your destiny in speculation. Lose control, and the market will take everything. Not because it's cruel, but because it's fair. In the end, success in trading comes down to this simple truth: discipline is the bridge between knowledge and profit. The market will always test your patience, your courage, and your self-control. But if you can master yourself, no market on earth can master you.